Did the Trump tax law only benefit billionaires? Did it destroy social programs or massively balloon the national debt? These are questions that spark heated debates online, but what's real and what's rhetoric? In this video, we'll break down the 2017 Tax Cuts and Jobs Act, what it really did, who it actually affected, and why so much of the conversation around it is misunderstood. Myth number 1, it only helped the wealthy. Yes, high-income earners did get larger tax cuts in absolute dollars, but nearly all income groups saw a reduction. According to the Tax Policy Center, over 80% of taxpayers received a cut in the first year. Myth number 2, it slashed social programs. The law didn't directly cut any federal programs. What it did do is reduce federal revenue, which critics argue could pressure future cuts. But as of now, programs like Social Security, Medicare, and Medicaid remained untouched. Myth number 3, it exploded the national debt. The law did increase the deficit by about $1.9 trillion over 10 years, according to the CBO. But debt growth is a combination of many factors: interest rates, spending, and economic performance. The tax law played a role, but it wasn't the only player. Low-income families. For low-income earners, the tax law increased the standard deduction and slightly expanded the child tax credit. Some saw modest savings, about $60 to $100 per month, depending on household size. Middle-class earners. Middle-income households typically saw a few hundred to a couple $1,000s in savings annually, depending on where they lived and how many dependents they had. High-income individuals. They gained the most from rate reductions, estate tax threshold increases, and pass-through deductions. Some also lost out, especially those in high-tax states due to changes in SALT deductions. The deduction for state and local taxes was capped at $10,000. This disproportionately impacted taxpayers in states like New York, California, and New Jersey. Individual mandate repeal. The law repealed the Affordable Care Act's individual mandate penalty. This led to more uninsured Americans, an unintended side effect. Corporate tax rate drop. The corporate tax rate was cut from 35% to 21%. This aimed to boost investment and wages, and while some companies increased bonuses, stock buybacks surged instead. Economic growth. The tax cuts spurred short-term economic growth in 2018, but long-term gains remain debated. The Congressional Research Service found little evidence of sustained wage growth tied directly to the cuts. Future reform. Many individual provisions expire in 2025. Congress will face pressure to either extend, revise, or repeal them. This makes future reform almost inevitable. Fairness debate. Critics argue the law widened inequality. Supporters claim it made the U.S. more competitive globally. The reality? It did a bit of both, and the debate is far from over. The Trump tax law wasn't a simple giveaway to the rich, nor was it an economic disaster. Like most major legislation, it had winners, losers, and a lot of complexity in between. What do you think? Was the law fair? Should it be revised? Drop your thoughts in the comments below. If you found this helpful, hit that like button and share it with someone who could use a fact check on this topic. And remember, understanding tax policy is the first step to influencing it.